Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today, chart of the S&P 500 hovering at the highs, pretty much a nothing day. It's the same old Groundhog Day. We have the war continuing, but the big news is we had a slew of earnings on a number of big stocks, namely Tesla, IBM, and of course the big boy Google. Okay, we're going to get to that and whether I think there are some trades for us in the future setting up based on those earnings. Okay, so first let's talk about the technical picture, guys. We're still hovering at the highs. We're going to call it neutral, right? We're bringing the moving average. It's right at the 50. You can say bullish to neutral. I like this setup. Like we said, it looks like they're consolidating at the highs before a move higher. Okay, this is very, very positive. So the technicals were in a zone, neutral to bullish. Okay, so let's go to the sentiment. Fear, right at the neutral. Still, all the sub indices are in fear. Breadth is bad. Still a lot of puts out there. Nothing really changed. I mean, we still have plenty of room to go higher. The only caveat, the only little asterisk that we have is that we never got to extreme fear. So I don't know how high the move higher might be, but it looks good. When you consolidate at highs and you rip, you usually go much higher. Okay. So yeah, everything is still bullish. Everything is still looking good. Okay. There's nothing that has derailed anything at this point. So we did have a slew of earnings. Let's get to the main event. Okay. The big boy first, Google. Google, if you can see, it pretty much beat on everything. Let's see what they have here. We can't really tell because it's not updating on what the earnings are, but we can go to Financial Juice. I like this site here. It'll give you the earnings here, Google. Okay. Anything else? Nope. Okay. We have basically Google right here. If you look at all the line items, revenue beats, okay, 119.8 compared to 117. So it beat on everything basically. And what is the stock doing? We always want to look at the reaction. Okay, it's basically flattish to nothing. Okay, what's my opinion right now? How would I trade it? I like it. I think that even though it's flattish, again, it's after hours. We have to look at the reaction tomorrow. We don't know what's going to happen, but I like the fact that it's holding at this level. Okay, yeah, it broke, but it's pretty much holding this level, which is support. Okay, we will see how it goes tomorrow. But for me, if it stays here, it'll be very beneficial to probably do some kind of short premium strategy, maybe short a strangle. Okay, I'll have to look at the prices tomorrow, but I'm looking to it. This looks good to me. Post market, post earnings, everything's out of the way. So you'll just go with the slow bleed, I guess, of the market and a move coming higher that will be supported by a move going higher in the market. Okay, so that Google to me is on the fence of whether I'm going to do a trade tomorrow. It all depends on the prices and what I can get and the risk reward. We will talk about it tomorrow if I ever do a trade. Okay, the next one is IBM. Okay, IBM, I like more. Okay, IBM, we saw here, we had an IBM print. EPS of 293 versus 280. It beat on the bottom line and revenue of 17.16 billion versus 17. It didn't beat on the top. So it was a meh report. One beat, one didn't, but I like and it's up slightly after hours. Not enough again, but I like the fact that it's coming into support and after a big drop, I like it. Okay, I will probably do a short put tomorrow on this stock. I love the setup. This is probably better of a setup than the Google, but yeah, you could do both. Okay, so IBM, I like. Google, I like. Let's get to the last guy, Tesla. Okay, Tesla. After hours, you can see this blue line right here. It's down to 363 and it closed at 374. So what is it? 10 points? 10 points, 2.5%? Nothing. Okay, now, what were the results? Okay, Tesla, do we have Tesla here? Ah, here it is. Okay, adjusted EPS, 33 cents. 33 cents here versus 51 expected. The revenue, 28.24 billion, and they expected 26, so they beat on the revenue, but not on the adjusted EPS. Okay, so let's get to Tesla here. They were expecting, let's see it more clearly, 52, they got 30. But here they beat by 2 billion. So they beat on the top line, not on the bottom line. And the result is fairly muted. Like I like this actually, despite the fact that they really, really sucked on the bottom line. It looks like it's probably because of like AI spending. Okay. Yeah, I like it. I will look to do a long trade on this as well. Okay. Maybe a strangle as well. All of them look good. Okay, I would say IBM is probably top notch in terms of selling a outright put, and for these guys, for Tesla, I'll probably do some kind of strangle, and for Google, the strangle as well. That's what I'm thinking. This could all change tomorrow. I have to see how the prices are. And remember, this is just today after market. Okay, the real move will be tomorrow. Okay, so this is just who knows. It's so small that it could go up. It could go up tomorrow. It could open up tomorrow. If it was bad, like we would see that a drop of 10, 15, 20% on all of these guys. Okay, the fact that earnings are muted, a lot of volatility got crushed. A lot of people who bought puts and bought calls are going to get smoked. That's going to get out of the way. Um, and this is what you want to see. Overall, when you see these big boys doing okay, having mixed results and not really tanking, the market is still supportive. Okay, the market is still in on these guys. They're not giving up just yet. Okay, so after, especially like IBM, especially a big drop in IBM like this at support, this is very, very good. This might be very, very constructive for IBM. Okay, it's a positive outlook. Okay, so the conclusion for the earnings, guys, I like it. It doesn't derail the market, and you can see I'm looking here at the market after hours. It's slightly up. Okay, didn't really affect the market. Didn't really hurt anything. Didn't really hurt the thesis of like AI doing well, hyperscalers are going to do well. So nothing really is derailed. So you want to stick with the trend. It's bullish. What can I say? Okay, so let's go to the war. Let's finish off with a war. Let's see what oil is doing today. Oil was up and then it gave it back. Okay, this is again on the result that the Houthis are back in the game. The Houthis have entered the picture and they're attacking the Red Sea ports. I think the U.S. could handle the Houthis better than they could handle Iran. So, like, we have this wick. Okay, we have this wick here. We have very bad news. The war is actually escalated. It's worse than it was initially, and yet oil is not at the highs. That's my conclusion. That's the last thing. And if we get some kind of wick and tomorrow it goes down, maybe the top is in for this rally. Tough to say. We'll have to see. But still, there is a war premium going on, but it's not as high as it was before. Okay, it's not at 112. So Trump might call this a victory. Okay, a lot of oil is coming online to mitigate this war, and I think it's being expressed in the oil price. Okay, the oil price is not back at highs. Like, it would have been something like this move right here if it was really, really bad, if the market really, really hated it. Okay, and this despite the fact that the U.S. 10-year yield is still climbing, climbing to the danger zone. Okay, the market is forward looking. I think the market is anticipating that once it gets close to here, there's going to be some kind of mitigating force, dovishness. Some kind of dovishness is going to come out from Trump or the Fed, and we're going to go down again. Okay, like this is a red line that will not be crossed, assuming this is what the market thinks, and we will go down from here. So it's just anticipating a down move going forward in rates is what I'm thinking. Okay, otherwise, rates should be screaming much higher, and the market would be tanking. So the market isn't tanking; it's not reacting yet because they think that Trump or the Fed will be dovish. If not, then we can get into pain. If the 10-year goes up and nothing is being said or mitigated, approaching the 4.8, 5, then we're going to get in trouble. Okay, and then the narrative will switch. But as of today, as of right now, which is Wednesday, the 22nd of July, the market is looking past this recent rise in rates. Okay, so we have that. And what about the last thing? Oil is up, so gold must be down? Nope. Oil is up, gold is up. You see, you're getting these changes in the narrative. Okay, you have to see it. It's small, and it's going to be. We have to see if it persists because this is a bottoming process. We don't know yet what gold is going to do, but I like the fact that this could be just an oversold bounce. We don't know, but I like the fact that it's consolidating at lows. Sentiment is in the toilet. We had this positive divergence in both RSI and MACD. So remember, my thoughts are we get to the 4,400 level before correcting and forming a higher low, then we can go higher. It takes time. Okay, so that's my base case for gold. I think we're close to a bottom. We don't have to. We can like undercut it again. We're going higher, but I just think that we're close to forming a bottom, and the next move higher is higher. I see it in my juniors. I see the exhaustion. The selling is starting to dissipate, and buyers are starting to come in. All right. So that's it, guys. We have a slew of earnings tomorrow. We have. Do we have? Yeah, we have Intel tomorrow. Okay, we have Intel tomorrow, and that's the big one tomorrow, right? Let's see. Well, oh, sorry. Yeah, Intel tomorrow. Um, Comcast tomorrow, and of course Freeport McMoran. That's about it. Nothing really big. And of course on Friday we have the big one is American Express. So basically Intel tomorrow, American Express on Friday. Okay, so that's it, guys. Let's see what happens this week. I suspect we sort of finish meh, not at highs, not at lows, but within, let's say, the 754 to 741 range on the spot. All right, later, guys.